Welcome back to Fast Market here on the Schwab Network. It's time for Cash Tags. For that, let's bring in our next guest. It's going to be Andy Swan. He's a co-founder of LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking retail once again. It seems like, as I mentioned before the break, it's some bifurcation here in the retail space where maybe some discount retailers are doing well, some aren't. Some are doing really well, like TJX. But what kind of data do you have on ROST stores? Because it's a choppy-looking chart here for this one.
Yeah, they've got a little room, a little momentum going into earnings. I think they've got very little room for error going into this report, which gives us some pause. Shares have really bounced back since Q1, and our data, really does show consumer interest is accelerating in this name, but tariff exposure risk is very high. So, they beat expectations last quarter, but they had really cautious guidance, and I think that's probably here to stay. Web visits, when we look at LikeFolio data, are up 15% year over year, which is really far ahead of Burlington and TJ Maxx. And traffic and comps improved late in Q1, led by cosmetics and apparel. So everything seems to be going well for ROST stores. I think that the guidance is going to be the key, and they kind of tipped their hand in the last quarter that they're not going to be very aggressive about guidance, especially in this tariff type of environment. So, for us, bifurcation is a great word that you used. We're seeing extreme bifurcation in terms of the consumer, and stores and retailers that are catering to a higher income demographic with premium pricing that they can pass through to customers are doing extremely well, while as those whose customers are feeling the pinch of inflation and pricing pressure are starting to do poorly. So, with that in mind, I think ROST stores, we kind of just sit back and watch and, listen to their take on the economy, because I think they're being extremely honest about it, and it can inform us going into the earnings of other retailers. So that's the way we're approaching ROST stores right now, is kind of, they're probably doing well, but they're probably worried about the future, and they probably should be. So that's kind of where we're at on ROST.
Andy, you mentioned the numbers they're putting up in terms of revenue, in terms of growth, all pretty solid, right? The counter argument to that is the valuation's also pretty solid, right? They're pretty fair. I read 2 articles that both said the valuation is pretty in line to where it should be. They're not cheap, they're not expensive, they're kind of in line. And you mentioned they've got some tariff issues. Off-price retailers have to constantly worry about tariffs. They've got the big competition from TJX, who can, if this is a Home Depot Lowe's relationship, they're a distant Lowe's to a company like TJX that does everything so well. They've got a couple lawsuits in California that to worry about, but that's not as important. But I think you're right. I think they may put up good numbers, and the stock might get hurt like it did last quarter because of the guidance will be real cautious. And that's something that investors just have to learn, to deal with.
Yeah, and the other thing is, TJ Maxx, that report they put out was really strong, and it put a level of expectations on ROST that I'm not sure that they can live up to, or even if they meet, does the stock sell off? It just feels like one of those situations where, no matter what they do, they're going to have to just absolutely come out guns blazing to impress the market enough to catch another bid higher here. And it's going to be difficult for them to do, because they're going to have, in order to do that, they have to reverse the guidance that they gave last quarter. And I don't think that there's anything in at least in LikeFolio's macro data, that suggests they should reverse the guidance that they gave last quarter. It's just choppy waters ahead, and they're doing very well. And I think that's a good story, but I don't know that it's good enough, to get a really big earnings pop.
Yeah, Andy, when they pulled their fiscal year guidance last quarter due to that macro uncertainty, but we've seen other companies, I'll just kind of refer to maybe a couple of the retailers, the airlines, they kind of all pulled guidance and then they reinstated guidance. That might actually be a benefit for this company. And what kind of trends are you guys seeing as far as foot traffic goes? Because that hurt Target, right? But it's helped some other retailers, and it just seems like what's going to be the catalyst here for a company like ROST, where there's a lot of uncertainty, and even your commentary is based on that. But at the same time, the consumer's still out there spending. Walmart, TJX, those kind of confirm that part of it, right?
Yeah, and I think ROST they're in a pretty good spot because the consumer wants to, kind of trade down a little bit. I think that they're there to take those customers that, maybe aren't going to go to the, designer brands as much anymore. They may be looking to save a little money. And I think ROST is in a perfect position to do that, just like TJ Maxx was. And we think that, store traffic will be very solid. Web visits up 15% year over year tells us that people are doing their research. They're trying to figure out where the store is. They're seeing what's on sale, and they're probably going into the store and spending money. And so I think ROST is doing very well, and I think the market already knows that. And so it will be about the company's outlook. It will be about tariffs. It will be about the things that LikeFolio doesn't have a lot of vision into. I do think you're right. If they can provide guidance, that would be a step in the right direction. But I think they're going to have a difficult time doing that. And so especially going into the holiday season, I wouldn't step in front of that if I were them. And I doubt that they do, but they're in the right place at the right time, and they're executing really well. So this is a great company, and I think if we get post earnings dip like we did last quarter, it was down 13%. I think the week of earnings, if we get something like that, that's a phenomenal opportunity to buy a really good company.
Yeah, and they source over 50% of the products that they sell from China. So this tariff impact is going to be massive at this point. All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan. He's a co-founder of LikeFolio joining us. Kevin, they're expecting about a plus or minus 6%